What does the move that you've made in the market say about where you believe the gains are going to be had in the months ahead?
Well, I can tell you what we're doing with our clients' portfolios and what we're seeing with our clients. And that is that, we have these overweights and obviously some of the tech positions, as you've seen that large run up over the last 6 months. So we're going to be taking some of the profits from those overweight names and not selling out of them altogether, but just right sizing those positions. And then we're going to be reinvesting those proceeds into some of the more beaten down and undervalued areas of the market. So that could be developed and emerging markets or international. We see good valuations there compared to U.S. But then among U.S., we could be seeing proceeds going into the financial sector, which has been beaten down year to date.
Yeah, that's for sure.
I think, yeah, I know. I mean, I think there's a couple of things though going on there in the financial sector, and you've got the credit quality situation where banks have been aggressively provisioning for their loan losses. And if we see that defaults are better than expected, they could be releasing some of those funds into earnings, and that could provide a slight tailwind for some of those. But then, we have the flat yield curve going out for a couple of years probably, and that's going to compress those net interest margins. So it's a bit of a mixed story for financials, but I think you can find some good, high-quality, financially strong companies in that sector that will have sustainable dividend yields, despite the Fed's putting a cap on dividends and share buybacks.
Yeah.
I think they would be likely to stop those share buybacks first and try to hold on to their dividend. And I think that some of the stronger ones probably can do that.
I mean, to be clear, you're not getting off the tech train, so to speak. You're just lightening up a little bit and looking at some other more depressed areas where you can see some opportunity.
That's right. I mean, it's basically, just the way that we rebalance our portfolios. It's our discipline that we stick with at all times. So, we still like a lot of tech names, and we're not getting out of them altogether, but we just got to make sure that we rebalance those and we diversify. We
Sure.
want to remain diversified, and we want to make sure that our clients' asset allocation, that strategic allocation between equity and fixed, remains at that where they need to be. We did a big rebalance back in March, right when the market dipped. And so we put that from fixed to equities. We caught that upswing, which has been really great for our clients. Now we're seeing that they're all a little bit overweight, so we're going to be trimming away. And obviously that, is going to be largely from some tech names. Yeah.
Did this week give you pause in any way, shape, or form with the Snowflake IPO? I'm just wondering how you view the current landscape. The way it's viewed today could be different than the way it was viewed just a week ago, given what Snowflake brought to market and how it was received.
Right. I mean, I think it is a rapidly changing situation that we've got, and we're going to see this kind of volatility, I think, in the near term. And, all you got to do there is you just got to be prepared. You got to remember who you are as an investor. You don't want to get whipsawed by what's going on in the market. You just got to remember that, if you're a long-term investor, you're looking out years and years, So, I don't get concerned about the recent situations, near-term volatility. I try not to worry about those things. I just do the things that you can control, which is, make changes at the margin of your portfolio. Make sure that you're where you need to be, So I don't know.
Yeah, but if that's the case, though, why are we to believe that this value trend of late can really be long-lasting if the longest-term trends in the economy are mostly geared towards technology?
Well, I think that there is something to be said for that momentum continuing. As trends are research has shown that a trend can persist a lot longer than you think it should or will. But I know, historically speaking, when we're talking about value and growth, if you look at Russell 1000 Growth Index and, the way it has outperformed the value index since 2008, if you go back to maybe around 2000 with the dot-com bubble, you saw how there was this sharp uptick in growth leading up to 2000, and then it was followed by value outperformance for the next 8 years. So right now we've seen that sharp uptick in growth over value just recently. So, I don't know if this signals some sort of overarching rotation into value. We hope so. We like to position our portfolios with a little bit of a value tilt. So we've been, pulling for that for quite some time.